If you're wondering how to build wealth for the future, real estate might be the answer. But words like income and potential can sound a little vague, can't they? In this video, we're breaking down exactly how real estate can make you money. Whether you're a total beginner or want to up your real estate game, this video is for you. So get comfortable and let's dive into how real estate can transform your finances. Now let's start on how real estate can make money and increase wealth. Real estate is often better than many other investments because it can regularly give you money, like monthly rent from properties you own. Besides this, over time, the value of your real estate can go up. This means you can make money now and in the future. Real estate is a great choice for growing your money and earning from it too. There are main advantages of putting your money into real estate. First, in real estate investing, as the value of your property increases, you don't need to pay taxes immediately on the extra money it's worth, which is called tax-deferred compounding of value. This allows your investment to grow more over the years. When you decide to sell your property, that's when you pay taxes on the profit you've made. However, there's a benefit here too. If you use the money you made from selling your property to buy a new investment property, you can delay paying those taxes. This way, you're not only saving money on taxes, but you're also continuously growing your investments by moving your profits into new properties. Aside from that, it can also produce regular cash flow. You can earn money each month by renting out a property. If you own a building with many apartments, you might get extra money from things like parking spots and storage spaces. This means that along with the rent they pay for living there, they might also pay you for these extra services. It's a good way to have a steady flow of money. Remember, if you own property that you've invested in, you will have costs. These costs are things like your mortgage payment, the taxes on your property, insurance, and keeping the property in good shape. To know if you are making money each month, you have to look at the money you earn from the property and subtract the money you spend on these costs. In addition, real estate investing can reduce income tax bills. You can save money on your income tax by using something called depreciation. This is a special expense that you don't actually have to pay out of your pocket. When you own property, it can become a little less valuable over time, like a car getting older. This loss in value is called depreciation. By claiming depreciation on your taxes, you can lower the amount of income tax you have to pay right now. This means you get to keep more of your money, which helps your cash flow, especially if you own property. Lastly, you can earn more money from your rental property over time. This happens when you raise the rent you charge faster than how much your costs for the property go up. Let's look at an easy example. Imagine you own a house you rent out. Each year, you might increase the rent you ask for a little bit, but your costs, like repairs or taxes, don't go up as much. Because of this, the money you make after paying your costs, called operating profit, gets bigger. You also have to pay income tax on this profit. This extra money means you are making a better return on your investment in the property as time goes on. Even small increases in rent can lead to more profit for you. With all these benefits, wouldn't you agree that real estate is a smart and effective way to build your wealth and secure a steady income? Let's say you have a dream to start your own business in real estate. This means you aim to buy, sell, or rent houses or pieces of land. It's a big challenge, but you are eager to learn and put in the effort. Let's look at what you're doing. You want to buy a house for $200,000 to rent it out. Before you invest your money, it's very important for you to carefully study the local real estate market to find places where people really want to rent. Keep in mind, the prices of houses and how much people want to rent can change in different areas. This example will show you how the costs and money you make from renting a house can change over time. You plan to pay for your house with a 20% down payment, which is $40,000, and get a loan for the rest, which is $160,000. You are thinking about getting a 30-year loan with a fixed interest rate of 6%. Now let's go into the specifics. Every month you spend $960 on your mortgage, $200 on property tax, and another $200 on things like upkeep and insurance. You also have a $1,400 rent payment each month. Now, this table is a simple way to see how your real estate investment might grow over time. Let's say the rent you collect and your expenses, excluding the principal portion of your home loan payment, increase by 3% each year. Additionally, we'll assume your property's value appreciates by 4% annually. To simplify this example, we're not factoring in depreciation. However, it's important to note that depreciation would lower your taxable income each year, potentially leading to tax savings. Let's see what happens over time with your property. When you first buy the property, you notice that the money you get from rent each month is about the same as your monthly costs. But by the 5th year, you are making $200 more each month than what you spend. Why does this happen? Your biggest cost, your loan payment for the property, stays the same. Even though you raise the rent by 3% every year and your other costs also go up by the same rate, the rent goes up faster over time. This means you start to get more money. An extra $200 a month may not seem like a lot, but it adds up to $2,400 a year. You made this money from your first investment of $40,000. So, after 5 years, your property is giving you a 6% return on your initial investment. And remember, if you include the tax savings for claiming property wear and tear, you actually make even more money. You can see in this table that each month you earn money from the rent after paying the property's costs. Also, look at the last 2 columns. By the 5th year, your ownership share in the property, called equity, grows a lot. This is the value of the property minus what you still owe on the mortgage. If the property's value goes up by 4% every year, your starting $40,000 grows to $94,370. This is because the property's worth is now $243,330, but you only owe $148,960 on it. By the time you reach 10 and 20 years, you will notice your monthly money coming in grows more, and the value of your property goes up a lot. After 30 years, once you have paid off your mortgage, your property will generate $3,393 or more each month, considering a 3% annual rent increase, and you won't owe any more money on it. It will be worth 3 times what you paid. Your costs each month will go down a lot because you won't have to pay the mortgage anymore. This means you'll have much more money coming in each month. In conclusion, you can grow your wealth and earn consistent income by investing in real estate. It offers benefits like tax savings, steady earnings, and increasing profits over time. Your experience teaches us valuable lessons. By renting out your property, you demonstrate that you can earn more than your expenses, especially after paying off your mortgage. This approach can significantly increase your profits and your ownership in the property. Looking ahead 30 years, you expect your earnings to substantially rise, illustrating the long-term advantages of real estate. Your story shows that success in real estate relies on careful planning and market understanding, making it an effective strategy for enhancing your finances over the years. Understanding the income and wealth-producing potential of real estate is key to making informed investment decisions. Real estate not only provides a steady stream of income through rentals, but also offers the opportunity for long-term wealth accumulation. As property values generally increase over time, investors can benefit from both regular earnings and the growth in their property's worth. Moreover, real estate investments can be a stable addition to your financial portfolio, balancing out market fluctuations. With proper management and strategy, real estate stands as a powerful tool for building and sustaining wealth. Thanks for watching. Our channel is dedicated to making investing, finance, and economic concepts easy to understand, empowering you to make smarter financial decisions. If you found this video helpful, others might too, so please share it to help them benefit as well. Help us spread the word by subscribing to our channel. Let's make finance and investing knowledge accessible to everyone. And don't forget to check out our website at www.investingcouncil.com for more information and resources. See you next time.